we're going to activate. And I want you guys to understand what I'm saying today, because I'm seeing everybody on this call right now can trade, but everybody on this call are not traders. Yeah, and because of there's other things going on, we haven't quite grasped it, we haven't quite turned a corner, and I'm going to help. It's easy for you to learn from the things that I say. You know, it's easy to teach. I have my own things that I have to take care of, etc., in regards to understanding who you are. All right. So first and foremost, I'm going to start there, understanding who you are, and I'm going to let you know who you are. And I'm sorry to burst your bubble. There is going to be nobody on this call. Yeah, more than likely. I'm not saying definitively, but more than likely, high probability, nobody on this call are going to come and join this call. I know we only got a few of us in this morning. I'm sure people are going to drop in late. All right, that are going to become the best traders in the world. I'm sorry to burst your bubble. It's highly unlikely that you're going to become the best, savant trader. Nobody's seen anything like it before. You've come into the markets and you are just crushing everything in sight. It's nice to think that that's going to be the case. I know we have goals and dreams to be that, but ultimately, if you was to stack your chips, I'd probably take the other side of that bet and say you're not going to be that person. Sorry. Yeah, I'm sorry. Does that mean that you can't take money out of these markets? Does that mean that you cannot take the money out of these markets? It does not mean that. Okay, it doesn't mean that. 1 second. I've had to make a Viking costume for my oldest son, who obviously at the last minute tells you, oh yeah, by the way, tomorrow we have to be a Viking at school. So man just broke out the tinfoil sellotape. It's looking crazy right now, I'm not gonna lie to you, Hollywood. Yeah, but anyway, and he sounds like he's in the hallway, but I don't know, practicing his Viking fighting or doing something crazy. But so therefore, if we are not going to be the best traders in the world, if we can't put our money on becoming the absolute best traders known to man, okay, then we can make sure that we are in a position to become the best risk managers. And that is in your control. It is in your control to say how much money you're going to risk on a trade and what a good trade is from a bad trade. That is in your control. And ultimately, that is what was going to make you a very good trader. Okay, but if you're relying on just coming to the markets, just closing your eyes, just feeling your laptop, and somehow you get a feeling that you need to sell right now, boom, and hitting the button and it goes to hell, that's probably not going to be the case. You're not going to be a savant of trading. All right, so first and foremost, let me show you some confluences and some things that you can learn from me and you can build upon. All right, first and foremost is this, because I've gone through the pain, yeah, for you lot, for everybody, for my own kids. Yeah, I'm determined by hook or by crook to have as much knowledge as possible in this trading space and be able to share that knowledge so other people can prosper. Yeah, that's why I'm here every morning, and I've dedicated myself to it for a good few years now. Yeah, for Unity and for myself prior to that, my education and journey. All right, so let's have a look here and understand. First and foremost, we can look in. I've got a little list here, and I've called this list my outside candle list. All right, so I'm just going to flick through this list, and all I'm looking for is on the daily time frame to understand what was happening yesterday. All right, now what does that mean? Well, it means that there's something that we see, and it happens more than not. Let me say that one more time. It happens more than not. Doesn't mean it happens every single time. There's very few things that these markets do every single time. There's very few strategies or single things that once you see that, this is happening. Very rarely, okay? It's normally a combination of things that happen in the market, okay, that allow you to make a decision, as well as understanding fundamentally what's happening in the world, okay, and as well as being able to take a decision on what to do. Now, first thing we're going to look at is, of course, we understand that we're going to go and see what the bigger market structure of any market we get in. Any market we get in, you got to know whether it's overall bullish, overall bearish, are you in a premium, or are you in a discount? If you don't know that, you're guessing. Okay, if you don't know, you are guessing. So for example, this JER 30, we can see if I go all the way out here on a weekly, if somebody asks me what JER 30 has been doing, I can say to them very definitively, not as my opinion, I could say that since overall this market has been bullish, but especially since September 2022, the market has been making higher highs and higher lows and higher highs and higher lows. Have a look at my dots. Dot, 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 dot. That's what the market's been doing. That's not my opinion. That is a fact. Okay. Now, therefore, that's allowing me to understand, okay, this is a generally typically bullish market, but I am cleverer than that. I understand that even in a bullish impulse, bullish wave, bullish market, the market moves in waves. It makes impulse, retracement, impulse, retracement, impulse, retracement. I need to work out what part of that wave am I in. All right. So I can see here on the daily time frame how the market's been making some higher highs and some higher lows. All right. Higher highs and higher lows. Look, have a look. You look at my smaller dots. You get some more dots in there for you guys to see, for the people at home to see. From here, I'm going to make this yellow. I'm going to make it 12. Higher highs, higher lows, higher highs, higher lows, higher highs. That's what's been happening. But then we've got to this little level here, and the market's come down here and made some equal lows, made some little slightly lower highs, and we're doing the hokey cokey in here. That's what we can see. All right. Now, one area of confluence we can add to understanding this is whether or not we've got an outside or an inside candle from our previous day. That's showing what is the previous momentum of the day. Okay, now in here, this is yesterday's candle, which was Monday, and it is not an outside candle, meaning it hasn't closed outside the range of the previous candle before. And for the fact that we're kind of going sideways in here, it's a little bit blurry. Okay, so when we see outside candles, and let's use the example from people who don't understand the outside candle energy, it's like this. Okay, let's imagine we're down here. I'm gonna make we're gonna rewind, we can do some back testing. This market has come down into a discount. Look, bottom of that range of these two white lines or yellow lines, whatever color they are, off white, yeah? And we're looking here and thinking to ourselves, what should we do? When should we get in for a buy? Now, there's many other factors on a smaller time frame that can allow us to get in for a buy, but one on a larger time frame to dictate what we think maybe is happening in the day is we can wait to see whether or not we're going to get a outside candle, okay? Now, in this instance, it's not great. It's not great at the moment here, but we're going to take it here for argument's sake. This candle, when I say it's not great, I just mean that I want to see things that are quite definitive. This is definitive, but the point is when you get quite small, like, oh, it's just a 1 millimeter higher than this wick in Forex, you leave yourself open to discrepancies. Because in Forex, one market, Oanda, might be different from another market, whatever other broker out there. One broker can be different from another broker in regards to how they quite display the candles, all right? But this is an outside candle. So let me explain to you some things about this outside candle. Well, first and foremost, with the outside candle, I'm expecting potentially as one part of confluence, one part of a strategy, that the next candle is also going to be an outside green candle. So what I can do is I can do this. This candle opened down here because it's a green candle and closed over here. I'm going to make this a yellow line. If you look to your right hand side, it'll say previous close, but we're just going to say close, previous close over here. Yeah. Now the next candle is going to open around here. Now if I believe that this candle today, which is not today because I'm back testing, is going to be a big green outside candle, any entry below the open, this yellow line, should be a good entry for a buy. Yeah, if I believe that this candle that's going to appear today is going to be a green candle because of this outside candle energy, and that is not the be all and end all. You can't just say it's an outside candle, I'm buying and hit the button anyway. All right, this is just part of the confluence. Obviously, you've got to drop your time frame down and see what's going on. But if this market starts to come down in here, which ain't a great example because there isn't huge imbalance here on the daily, yeah. But any entry below this yellow line would be good for a buy. Let's see what happens. Okay, so the market came down here. So let's imagine down here. Now, if I was to zoom in on this day, which I could do now, but I got a concern it might not give me the data. Okay, but if I was to zoom in on this day, I'd be looking at what's happening down here in this wick. Is down here on a smaller time frame, on a 5-minute time frame or whatever time frame, is the market taking some liquidity from below, giving me an excuse to get in for the buy? Because if it did, and I was to get an entry down here, for argument's sake, where is my little thing? Down here. Yeah, I got some lovely entry. The market just took liquidity. The market made a lovely manipulation pattern with displacement. The market started to push out of there. The market tapped back in. Then I can aim at worst case scenario, at least for above the previous wick high. Why? Because I'm expecting it to be a green candle for the day. So that wick high here, if I put a line in here and I make it blue to say it's a target, that's at least going to be a target for me because I'm expecting to see an outside green candle again. Which, look, the market did, and this, look, we have to understand this here. What I'm looking at is I'm looking at this on a much bigger time frame. I'm looking at it on a much bigger time frame. So therefore, that entry could have been a beautiful tiny little entry that I feel quite confident that the market by the end of the day will at least get up to this wick high. In this instance, we went straight past it and pushed all the way up to here. So this outside candle, and look, for example, here's another outside candle. So what would I be thinking? Let's just using this one part of confluence for you to add to how you mark up the charts. I'm looking at this candle that closed here. I can also see this imbalance between here and where the next daily candle is going to open. So once again, if I believe there's going to be another outside green candle, bearing in mind I'm coming from a discount, which is the bottom of this range down here, this line here, if I thicken it up for you so you know what I'm talking about, this is a discounted area. And I've seen an outside candle and I've seen another outside candle. I'm believing that maybe we're going to get another outside candle. All right? As one part of my confluence, not the only part, as one part. And I understand that anything below the open of the candle, i.e. down here, could be great for a buy. I also understand that the markets do not like imbalances. So as soon as this candle opens, there may be an opportunity to either sell into the buy, or simply wait for a buy opportunity. That's down to myself, depending on how big that opportunity is, depending on when you wake up in the morning. Where are you? When you wake up in the morning, did your green candle just open and you're just up here and there's still an imbalance, inefficiency between where the candle opened and the previous wick? This is what it depends on, which I'm not zooming in on the day at the moment. I'm just showing it to see what the next candle is going to be. Let's hit next. Okay, well, in this instance, me selling into this buy as it closed up this imbalance would have still had me in profits. And at some point in the day, even though you can see this is a red candle, don't say, it's got it wrong. At some point in the day, this candle was up here. Now, the point I'm making to you is we're not taking these trades on a daily time frame and sitting down and holding it on for the whole day. What I'm saying is that this is giving me a bias of what to do, because my bias said this, look, that I could sell into the buy. So therefore, on a smaller time frame, if I saw liquidity was being taken from above, I could have sold, looking at that imbalance as a metric of where this market might turn around, and it might have got to that area, closed the imbalance, and given me no reason to get out because it never showed me any break of structure in the opposite direction. And for all I know, I could have said, oh, wait a minute, I did think there's going to be another outside green candle. However, the market didn't give me no confirmations to do so. Or maybe this market pushed up first up into this wick here and took liquidity from above a level, and I was able to sell into that imbalance and the market just kept going. Now I'm going to show you it on a zoomed in basis when we get further down, like closer to so I can get the data. Okay, in fact, I'll tell you what, let's just try and do it here. All right, this is a good instance, because remember, these outside candles, this is one metric. It's not a be all and end all, but let me tell you something. If I went back one day, which I'm going to try and do, it gives you a basis of understanding what the market may do. So look, for example, I looked at this here and I thought to myself, look, this market closed up in here, meaning we may get another outside green candle, but I can see the opportunity, which is this imbalance from here all the way down here, which for me on a euro is like 50-60 pips. Now let's drop our time frame. Let's have a try, see if we can have a look inside of there. All right, so we're going to go down to our 4-hour time frame. We're going to go down to our 1-hour time frame, and we're going to understand what's going on. So, I'll tell you what, let's go back on the daily. What day is that? It's Friday. Guys, I don't like this scenario. I didn't realize it was Friday. All right. The reason why I said I didn't realize I don't like the scenario is because the next trading day for our DAX is going to be Monday, which is Saturday, Sunday. These things have happened. Hence the reason over the weekend you hear traders say that they don't trade on a Monday. Why? Because the world's still been spinning on Saturday and Sunday. And we don't know whether or not something crazy's happened over the weekend that's going to influence this market and throw out our outside confluence. So that's a bit of a mess, but I'll tell you what I'll do. I already noticed that now. We'll do it anyway. All right. So we'll drop down and we'll be looking on a smaller time frame. The next candles we're going to see is going to be Monday, jumping from Friday to Monday. All right. So if I drop all the way down to my hour time frame, and hopefully it gives me the data. It's taking its time. Still taking its time. Taking far too long. All right, there we go. All right, so look, this is all saying Friday. Okay, now when we start to click forward in our hours, now what you can see here, these little colorful things that have appeared on my chart, just the sessions. But now we're going to get into Monday. All right, so here we go. Now we should be in Monday the 12th. We are in Monday, and now I can see here. Remember what I said about this potential imbalance below, okay? This potential imbalance that was below. That is this gray box. Remember, from our daily, I'm not going to click it in case it takes all year, all right? In fact, what I will do is I'll open it up in another market, so we can just, in another window, sorry, so we can just flick in between, all right? We'll make this one DE 30 EUR, all right? I'm going to do this as quickly as possible so we can get in and actually take some trades today. Oh no, I can't do it, can I? Because I've rewound it, so forget about it. This grey box here was our imbalance area, okay? I can't be bothered to rewind and try and match it all up and lock, yeah? So, when we wake up, this is Asian session, we're sleeping on a Monday. This is 1 o'clock, 2 o'clock in the morning, all right? We're sleeping, and we can see the market was trading within this Asian session, all right? Which is this red box over here. Let's keep going. London's only opened here. I'd actually want to go back because we're on an hour time frame. I'd like to scoot back a little bit and drop my time frame. I just hope that we don't have no dramas and it gives me the data with no issues. Okay, so if we drop all the way back down to, let's just say if we can, I'm pushing it by saying 5 minutes. Just let's push it, see if we can get 5 minutes. Yes. All right. So look, here we are, 5 minute. All right, in data, we can see we are trading within our Asian session. You see the age, and guys, this isn't one I made earlier. I just scooted back. So we're doing this essentially backtesting live. The only thing with backtesting is you don't get the news data. So I don't know whether or not right now there's a bloody explosion happening somewhere in central, America that's affecting the markets. I don't know. That's the only thing with backtesting. Whereas if we were doing it live, we'd be able to check our news and know, okay, it's FOMC today. All right. I don't know that from the backtesting. Yeah. So we can see Asian session. This is the range, this red block. Yeah. Now, at this point in time, it's 6:40. We're awake. We're looking at these markets. Let's have a look and see what's going on. I'm waiting to see whether liquidity is going to get taken to allow me to get into the trades. Now, London's just opened on a 5 minute time frame, and for me, I would have liked to have seen it taken this little high over here. Yeah, I'm being real. I'd like to see the market taking the liquidity above here before me getting involved. However, I am very, very conscious of this gray box because I said I'd like to sell into the buy. Now, I know on a 1 minute time frame, you see in here, we have where's liquidity taken from above smaller levels? Because guys, there's liquidity above all of these levels, but all liquidity is not made equal. Do you understand? All right, all liquidity is not made equal. So we want to find places where there's a lot of liquidity, but I can see here a lovely manipulation M. We cannot see it on a 5 minute time frame, but I can see it. It's there on a 1 minute. All right, on a 5 minute, that's what it looks like. Let me try and get the 1 minute. Only thing is, this is like hit and miss. If I try and it doesn't give it to me, then we have to start again. I tell you what, let me put a vertical line so I know where we are. Yeah, there you go. So I remember where we are. If it doesn't give me the data, okay, it's giving me the data. So have a look. So I can see here that London opened and made a lovely manipulation M. Can you see it? Boom, 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 boom. Now, I'm not going to lie to you. I wouldn't be in a rush to take the trade if you want me to be honest, because I would have preferred that it took the liquidity from above this red line here. Yeah, above this red line, I'd prefer that liquidity was taken before I take the trade. Now, liquidity was taken above this little level in here and this little level in here. So therefore, possibly, and here would be our entry. The entry would be as our manipulation M has been made with some displacement. Okay, we can see some displacement, a big red push here. If you can't see it, it's like this. And the reason why I'm taking this as even meaning anything, well, semi-meaning things, I don't like the fact that we didn't take this liquidity, I can't lie to you, yeah, is because of the time. The time is London's just started, and London's made ultimately a manipulation M isn't an M. It's not just the letter. Some people get quite confused to say, oh yeah, these guys are just taking M's and W's. No, it's what the letter represents. The letter represents that the market, there's been a change of character, that the market was making higher highs and higher lows. Look, if I was to do it as a drawing, the letter represents the shape of this market, meaning that structure is broken, because previously it was doing this. None of these have given us our manipulation M until we see this, and then we see this. Something's changed there. A manipulation M's turned up and something's changed. Now, I do not like this one because the liquidity hasn't been taken from the place that I wanted to see it taken from, which is Asian session highs. All right, but we have seen a manipulation M turn up here. Boom, 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 boom. And we have seen an opportunity to tap into that trade, which was after this candle closed. Anything that retraces back into the imbalance of that, for where that middle of the M is a potential entry. Okay, but I don't like it. So in real life, would I have taken it? Possibly not. However, remember, in the back of our brain, I'm saying that potentially there's an opportunity of this market selling into this imbalance on the basis that we think we said we're going to get a big green candle. So that might be the only reason why I might have taken a jab in here, because the timing of London session starting, the large displacement that I've seen by this push down here, and to see that smaller manipulation M after taking smaller liquidity levels, maybe I would have jabbed in there. It's me trying to be honest. It's no point me saying yes I would have taken it, because I don't like the fact that we didn't capture Asian session highs. Okay, let's see what happens. I'm going to play it forwards. Oh, well, we did come and capture some Asian session highs over here after the fact. So that would have been my justification of saying I didn't like the fact that the market didn't come up here and take these Asian session highs. So if I did take a jab here, yes, I would have been risk-free by the time we got down here. But the market actually did come and do what I would like to see it do, which is take some liquidity first. Yeah, took some liquidity from above this red line here, which is Asian session highs, because I made it very clear to you guys, we do not take a trade until liquidity has been taken. So this little here was a level of liquidity, and this little push up here was me being able to change it to liquidity being taken. Now, even though this market comes and pushes down into here, does it give me a clean opportunity to get in? I don't think so. There's not a clean manipulation M in here that I can turn and say, yep, that's how I would have gotten in. It's no point me just lying for the sake of lying. But for the sake of the session, just to say I'm right, okay? Because I'm comfortable with not being right, yeah? So I'm looking at this level of the market coming and pushing it, taking liquidity, understanding that the market wants to potentially come down in here and close this imbalance. But this push down here is 50% in that imbalance, okay? It's 50% in the imbalance, and at that point in time, I'd be concerned. Look at that, I've measured it out. Exactly 50% this pushes into this gray box, which I drew from the daily time frame, showing the imbalance between the other candles, wick, and where this candle opened up. And where this candle opened, I should have put some lines in. I should have put some lines into exactly where it opened. But where it opened would have been, tell you where, about here. On this line here, candle opened in here, made a little push up in here, started to come down into this level in here. Now, what would I be thinking? I'd be thinking to myself, boy, we've pushed into that liquidity 50%, and now potentially this market's going to push up and make a big green candle. That's what I'd be thinking to myself. I'm not lying to you, I'm being honest, because ultimately we had an outside candle, and I'm thinking to myself, that's possible. Furthermore, we came into this area of imbalance. We've seen a manipulation W turn up on a 1 minute time frame. I do want to scoot through these time frames. I'm hoping it gives it to me. We've seen one turn up on a 5 minute time frame after taking Asian session lows, and I'd be thinking to myself that potentially the opportunity is to see what happens when this market comes back into this area here, where we've got this displacement pushing past the middle of the W. Okay, are we going to get a correction and continuation and see a nice big green candle form for the day? That's what I would be thinking, and I'd drop my time frame down to our minute time frame, as we can see here, and I'd be expecting to see it this come and then this happen. That would be my correction, my continuation to ride this to a green candle. All right, so I'll be watching it, waiting for some sort of reaction in here. All right, because we've come down in. I am still a bit concerned that maybe the market decides to come and close this imbalance fully, but I'd be watching it. Let's have a see. Let's have a look. I'm gonna put it at times. Oh look, they've added some different speeds. Good. They've listened to man. Because I was like, why did they? What? Remember I was saying before, why did they just jump from 3x to 10x? Okay, cool. Have a look. So this market's pushed back up into these levels, and I'm thinking to myself, maybe I've missed my opportunity, but we're coming back down into that area. I'll be thinking to myself, are we going to tap in here? You know, now because this market pushed so hard, the tap in here would have to close back up in here to justify some stuff for me. So I don't like the fact that we didn't tap in straight away. I didn't like the fact that this market didn't make this manipulation W and tap in straight away. I'm not going to lie to you, I don't like it, because ultimately this market from where I'm standing looks like it's going sideways in this bigger London range. You see it? It's not decided to do anything at the moment. And this is me reading and reacting to what the markets are doing. I am concerned about this imbalance. I do hopefully want to see a nice big green candle powering outside of here, but I'm a little bit concerned that the market is fraffing about on a Monday and it's not doing anything. It's trading within a London session range at the moment. So what I would do here, if I wasn't able to get in here on this quick manipulation W that tapped in to this 50% level, it didn't give me a tap in. If it did give me a tap in, I would have taken it up here and I would have taken money at the markets. I don't give a damn. Yeah, up to where? Structure. Yeah, that's what I would have done. But it didn't give me a tap in, and it pushed all the way up in here. Now it's coming back down here. I'm like, what is it doing? It's ramping. So for me personally, I'd be saying I'm not getting in this trade unless I see it break outside of this range. It's me being honest. I'd be saying, you know what? I don't know what this market's doing. Like this market here came into here, took liquidity from Asian session lows, started pushing up here. Why is it back down here? Made a manipulation W. Okay, maybe wanted to tap into deeper into this imbalance. Made a lovely manipulation pattern, pushed out. It didn't tap in. Why didn't it tap in? Why did it push all the way up into here? And then why did it stop at this high? That's what I'd be saying. I say, why? Why not break this high and then come back so you're making a higher high and higher low? That's what I'd be asking myself. At the moment, we're making equal highs, equal lows. So how can I can't just take this trade if it taps into this middle of this 1 minute manipulation W. I've got to see it break some decent structure. That's what I'd be saying to myself. Let's see what happens. Market's pushing down. Oh, market's pushing past this structure. Right now, I'll be saying, you know, I don't know what this market's going to do apart from potentially close up this imbalance some more. So I'd either be saying I'm going to try and take a short sell, closing up this imbalance fully, which it's not a high probability, not the most gorgeous of trades. Or I'd be saying I'm leaving this alone. Just being honest with you. That's what I'd be doing. Yeah, because ultimately, I don't understand why this market's doing a hokey cokey in here. I'd be looking left to see the other levels of liquidity. I'll be using my session indicator and look where the other liquidity level is over here. Pow. So I'll be thinking to myself, for the fact that this market's already taken the liquidity, from Asian session low, decided they want to go, then somehow it turned around and said, nah, it got all greedy and said, nah, we're not done here. We need to take more liquidity. And it came back in here. And I was like, okay, we've made a little manipulation pattern. Maybe I can get an opportunity to tap in. It didn't give me that. And then it turned around here. I'll be thinking to myself that this market is going for this liquidity. So the only thing I would do if I had a gun to my head is trying to take a sell short position for it to capture this liquidity down here. As in closing the imbalance that I was concerned about fully and capture this liquidity below here. That would be my play at the moment because I don't understand why it's down here. It's already taken liquidity from Asian session lows. All of this little energy in here is just fraff. So why are you back down in here? Maybe because you're going for a bigger price. Let's see what happens. Exactly. Oh, nearly. Exactly. Yeah, that's what it's done. It's coming, it's pushed all the way down here and taken these lows over here. So at this moment in time, I'm thinking to myself two things. I'm either not involved in this trade because it's doing madness, but now it's taken this liquidity. This is London sessions just finished at 10 o'clock. I'll be thinking to myself, maybe there's an opportunity. Now, this unfortunately has fallen outside of our kill zone time that we like to take trades. But let's look at it anyway. I'd be thinking to myself, liquidity's just been taken. We understand the markets like to run in the opposite direction after taking liquidity. Even if this market wants to continue coming down, there may be an opportunity to take some sort of buy position, because remember, the back of my mind, I'm thinking to myself, we might get a nice big outside green candle. And I'll be looking here for an indication correction continuation or some sort of manipulation pattern to give me some sort of wink or nod that this market might want to push back up. Now, I must make sure that I've identified, is there any other delicious liquidity levels sitting below here? Now, you maybe can't see it. Let me brighten it up. These are the zones. Did it brighten up here? Here. You see? So this is New York session. This is all New York session, but in here they call it like a lunchtime kind of time period. So obviously I can see a previous battlefield, which was kind of in here, kind of in this whole area as a previous battlefield of New York AM sessions over here. Okay, and some kind of, we sat on top of the session, we broke through it, we were underneath it, we sat back on top of it. Kind of a previous battlefield is what I call it. So I'm going to label that previous battlefield. And I'm thinking to myself, well, it's done enough damage here. I personally would be looking to see if we get a break of structure that I could take some sort of buy up for that nice big green candle. Yeah, maybe it doesn't happen in the London session. Maybe it happens in New York session. Let's play it forward and see what happens. This is what you call back testing, guys. I'm not losing any money right now. I'm looking at the markets and understanding what I woulda, coulda, maybe might have done if I was in this market. Okay, now back testing isn't the same like taking trades. All right, because taking trades in real time is different. But but it does give you some sort of bearing to look at your strategy and get comfortable with the markets. I've said that it's taken this liquidity from here, and I want to see some sort of break of structure. All right. Let me go to my 1 minute time frame. 1 minute time frame is a bit of a mess. Can you see all this energy in here? So I wouldn't stay there. I want to clean it up for my eye. Let's look at the 5 minute time frame. Cool. So on a 5 minute time frame, I can see a little bit of structure in here, a little bit of a, you know, kink in here, as well as some other little froth. I'm waiting to see if this market going to start trying to push up and do something. Let's see. Let's see. Okay. We've taken liquidity now. This is our play. We understand that we don't take a trade unless liquidity has been taken. Now liquidity has just been taken. I've just changed this, and I'm looking at it, thinking to myself, is there some sort of entry for me? But the market did make a manipulation W pattern on the 5 minute time frame. Have a look. Boom, 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 boom. All right. Now I can't just hit the button up here because I've got to put my stop loss down there. Then I would like to see this market tap back in, and either on a smaller time frame I see a breaker structure again, or I wait for the correction back into this level and then continuation, and I can take the entry up here with my stop either below the swing low or below the last low, depending on how aggressive I want to be. Okay, if I drop to my 1 minute time frame, let's have a look in here. The 1 minute time frame, like I said to you, it's not clean for me to see a lovely manipulation breaker structure pattern in here. Let's look on the 2 minute. Maybe there's a little 2 minute energy in here. Either way, this area in here may be an area that the market corrects back into. Let me make that green, and I'd be waiting and watching. Look on the 3 minute. Yeah, same kind of place. 4 minute, ugly. 5 minute is in and around this area. Now if we look at the candles, we can see this displacement, how this market pushed out of this area. So therefore anything in this area, if you really want to go there, is entry territory. Personally, I'd probably be waiting for indication, correction, continuation, just because of how funny this market's been moving. All right, we've seen all of this energy here and here, look, breaking structure. I need to identify where this market might, if this market wants to be bearish, where it might retrace to. Well, we always want to understand where 50% of any impulse is. So even if I get in here for a buy, the energy might only come up to here, and then decide, nah, Jay, I know you think I'm going to be a big green candle, but we want to go bearish. So I've got to be conscious of that. That's got to dictate my type of entry. If my entry is beautiful, I get a lovely 1 minute entry, well, who cares? By the time I get up to this 50%, I could be at a 1 to 5, 1 to 10. Yeah, but if I don't get a great entry and I'm looking at this market, it's only going to be a 1 to 1. I'm not getting in a trade for 1 to 1 trade to potentially this area. All right, so we're watching it. Let's hit play, see what happens. Market comes back in, taps back into that area of interest that we've seen. And like I said, at that point in time, when I see this market make this retracement back into this area, look at it on the 1 minute time frame. Back into this 1 minute, no, sorry, it wasn't 1 minute, 2 minute manipulation breaker structure into this area where I had this green level. I'd be dropping my time frame and look to see, am I getting another breaker structure? Well, I am. There is another little manipulation breaker structure happening in here. All right, but I'd be waiting personally for a indication, correction, continuation. Let's see how it plays out. Yeah, and potentially there, I could have said, you know what? If I was there being aggressive, that I wanted to get into this trade like this, okay, for 17 pips, go placing my stop below the low. I could do. The first milestone is, are we going to break this level here? That's the first milestone. Okay, if this market comes up here and starts doing some froth coming back down here, I can close myself out this trade early because we have to break here. Okay, let's see what happens. Lovely. All right, so now we're in the trade and we're moving forward. Okay, lovely entry that we've taken it down here. We've seen another manipulation W happening here. We've seen the market tap back into that candle, which is this imbalance. So really the entry could have been around here if you're wicked and bad, with your stop below here. All right, so right now this trade has gotten up to a 1 to 2, now 2.6, let's say 1 to 3, and I'm getting to that point where, because I'm a bit concerned, look at the 50% area, I most definitely at 1 to 3, I'm going to be taking my profits, as in taking off 50% partials and making it risk free. Can you see how I'm managing the trade based upon the events that are in front of me? I have to. The market's moving mad. It came down here, brrr, trader moving this little yellow range, just doing a madness. Like, I think to myself, we're gonna get a big green candle, but for the whole of London session, we're going in the wrong direction. All right. So right now, when it's got to 1 to 3, I'm moving it, making it risk free, and taking off 50% of my position. All right, let's see what happens, because we've pushed and we've broken structure here. We understand when the market breaks structure, indication, we understand there's going to be some sort of correction for it to continue. So hopefully this market might say, yeah, we're going to trade up, guys, Jay, in this little range in here, and we're going to go to the moon. but I'm be watching it because I'm a bit concerned of this bearish energy. The only way this market's been bearish because there's been bear sellers selling. Well, where are those sellers gone? Have they disappeared? I'm concerned. Yeah, let's see what happens. Lovely. We'll get to what we've got to our 1 to 3. Okay, excellent. I've now made this completely risk-free. So this is not here. This is like this. That's that zip. And now it's all profits. And I've taken off 50% of the profits. Now everything is bonus. The next question is now, are we going to get to the next milestone of trying to get up towards this structure of this London session high? Let's see. Let's hit the button. We was expecting to see a retracement because we're trading within. We're having a look. We're having a look, seeing what happened. Okay, at this point, see when the market came down here and I'm in this range, I don't mind this little energy here, making a retracement. But when I see this market come and start making this energy here, boom, pushing outside of my range, I'm a little bit concerned. I'm an itty-bitty concerned. Because I'm like, why are you coming out of this range now of making your higher highs, higher lows, higher highs? This is still the higher low, don't get it twisted. The higher low is still all the way down here, but me personally, if we get down here before pushing up some more, it's going to stop me out. Well, I don't care, I've already taken 50% of my position. All right, but if I put my dots in, have a look. There, 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 there. So anything above this yellow dot is a higher low. Just in this instance, it might just about stop me out, but who cares? I've already taken 50% of the position, and that market and that trade pushed up into these levels here. Cool, let's see what happens. All right, hit play. So we kind of respected this structure over here. We didn't come down. The market started pushing back in here, getting me excited. All right, coming back to these equal highs. And then we've seen a massive dive off a cliff coming down here. And that's looking like, I've paused it, but that's looking like it may have stopped me out. Now I'm concerned. Remember what I said? What did I say I was concerned about? Got that Fibonacci. Look at that Fibonacci. What was I concerned about? If you've been following what I've been saying this morning, what was I concerned about with this impulse coming down here? What was I concerned about? I drew it in there with a Fibonacci. I drew it in there with a Fibonacci. This big impulse from here pushed all the way down here, breaking structure. And I drew something in with a Fibonacci because I was concerned about what? Come on, somebody's with me. Yeah.
Imbalance.
Say again.
Imbalance.
Imbalance is the go-to phrase, but no, that's not what I was concerned about. I was concerned about this market now being bearish, breaking structure bearishly and making a 50% retracement. So I pulled out this Fibonacci and identified this 50% level, which the market has come up to. Boom, it just doesn't want to break it. Come up here, boom, it's come down here. It's doing the hokey cokey at this 50% level in here, which I'm quite concerned about. Let's see what happens. And just as my concern was, is this market and has broken down, stopped us out, doesn't matter. We took off 50% partials, so that would have been, you know, like 1.5% from a 1 to 3. Okay, if we were taking 1%, so that's cool. And we got stopped out now for the rest of the position got stopped out. But as I'm seeing this now, I'm quite concerned. Because I was thinking to myself, oh, as well as that, guys, is this. Sorry. What I missed out on that is, look, at this point when we've pushed back up into this level, the timing is that New York's just about to open. So when New York opens and I see a manipulation M turning up after taking liquidity from above these highs here, look, there is liquidity above these highs, which is the 50% level. I see New York session open and make a manipulation M. Can you see it? Because I can see it. Boom. In here. Boom, 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 boom. When I see that happen, and then I see the market tapping back in, here's my entry, I would have been out of that trade, taking my profits up here, and potentially in for the sell. Because remember, we are taking time-based trading. This is New York session now. Before London's man was at the helm, and then New York had just had the handover, and they've sat down and been like, whoa, 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 what's going on? They've taken liquidity. We know we only take trades after there's a liquidity being taken. The market's pushed down with a lovely displacement breaking structure here. Lovely manipulation M. And then on the next candle, we've seen the market tap in, giving us a lovely entry like so. Entry, stop above the highs. As soon as that market opens, because we know that this is New York session. So what is this showing us? This showing us is that when we take a trade, we're taking a trade based upon when volume comes in the market. London session gives us an opportunity. Then we need to reset, wipe our eyes, slap our face, and look at the new setup when New York's coming in. Is it going to be a continuation? Is it going to be something else? Well, I don't know. But when the market opens here at New York, and I see the market make a lovely manipulation M pattern after taking liquidity above this 50% level, above these highs, and I see this displacement, I've got to be sensitive as a day trader to the opportunity today in New York session might be for the sell. AKA, I'm waiting for anything. Look, if I could rewind this, when that manipulation M happens, I'm looking at anything at the middle of the M. Can you see here's the middle of the M in here? On the candle tape, I'm looking at the displacement that's come from the manipulation of the M, this displacement, big candle making an imbalance in here. And I'm saying anything that taps back in, look, taps back into that green box is entry energy for me. Yeah, especially if it taps back in and gets to the middle of the M, which is here. There is the middle of the M. There is the middle of the M. This red candle, this wick. Anything that gets up in there is a potential entry on the volley there. If you want a better entry, if you don't, you're gonna wait till it corrects and continues, which is a little safer of a trade, but a little worse risk to reward. And have a look. Next candle taps in beautifully in here, into this concern, this green box, beautifully, just about 50% into that whole imbalance. That would have been our entry. Would our stop above the high if we was aggressive. If we're not aggressive, we're like, Jay, I missed this entry. You're waiting for this is a correction. You're waiting for a continuation closure below this low. That would be it. And there you go. That would be it, and that would be your entry, with your stop either above these highs, safest place, above the swing high, or above the last high, which I wouldn't take this high because on a 1 minute time frame it's a bit flimsy. Here, it's 20 pips, it's nothing. Yeah, and then we'd have been in that trade for London, and somebody's saying, yeah, Jay, okay, we're in that trade. Where's our targets? Well, if London sessions just started here, we understand that our targets are going to be where liquidity is, or where we can see significant structure. Yeah, so significant structure we can see is going to be here. Let me make that a bright color so that we can see. Let me make it a solid line so that we can see. You know, that is going to, no, let me make it a different color. Blue. That's going to be a significant structure in here, where the market came down and pushed it. Because how do you identify significant structure? Just open up your time frames. If it's a swing low on a 1 minute time frame, you put it on a 5 minute time frame, you can't see it nowhere. It's not significant. Yeah, this area here is a swing low on a 1 minute and a 5 minute and a 10 minute and a 15 minute. It's a significant bit of structure. Where's going to be the next bit of structure? Look, this is a significant bit of structure where the market came up here, came down here, then pushed up. Then the next one would be, this would be a significant bit of structure, because I'm on a 15-minute time frame, I'm on a larger time frame. These are going to be targets. You get it? All right. So if I got into that trade there from New York session here, lovely trade. I took it actually upon it tapping me in, puts my stop above here. This would be a first target. Boom. Furthermore, we've already got to 1 to 3, so I've already made it completely risk-free and taken off 50% partials. But then this is running. This is another target here. If I wanted, I could take off some more, maybe take off 25%. Off the or another 50% of what's left, which is 25%, if I wanted to, because this market is running. And you know, if I'm in a trade and the market's just going like this, bang, 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 bang. What am I concerned about? What am I concerned about when the market is just going to hell like this? Especially if I'm in a good profit position. What am I concerned about?
The imbalance.
Yeah, the imbalance is forming, or the fact that it's going to retrace at some point. It's not just going to keep going like this, bang, 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 bang. I'm going to come back later on, there's just more red candles going down off the page. At some point, it's going to retrace. So if I'm in good profits here, I don't want to sit in there for it to go and take me all the way back to zero. Why should I? I'm a day trader, and I'm up. Give me my money. So I'd be looking at this, and when we hit this next target here, but I might as well say, you know what, boom, me move my stop up to here and take the money. I'm giving myself an excuse to take the money. Yeah, see what happens. Maybe this market might just keep falling down, but if it starts retracing all back, I don't want to be in that retracement. Let's see what happens. I don't want to be involved in all of that. I'm cool if the market stopped me out over here. We did see another little push. Okay, so depending on where we placed our stop, yeah, right, probably would have been slightly above here, above this wick. Okay, but either way, we saw another little push. But in the market, I don't want to be in it coming back here, because this market could come all the way back up into here, into the previous battlefield, all the way up in here. I don't want to be involved in that. I don't need to. I've just taken 50% off. I've just let my bonus run all the way down here for a 1 to, like a 1 to, what is that? Can't even see the ratio because I've pulled this bit here. Silly bugger, silly me. Because I've pulled a stop loss, but I can't even see what the ratio is. All right, but let's look at it by eye. 1, 2, 3, 4, 5. Maybe I run to 5, 1 to 6. I'm good. Yeah, I'm good to move my stop here and take more money out the markets and then look for any additional opportunities. Cool. Let's get to current price. Let's see if we can take some trades today. All right. See if we can. I'm gonna wipe my charts. Let's see if we can take some trades today. We have missed London Open, of course, because it's now 9 o'clock. Let's have a check to see what's happening in the world. Is there any news coming out at 9 o'clock? 9 o'clock's a significant time. Let's have a look. I'm in here. I'm looking at my charts. We can see some red fall down news that just is going to happen in an hour, which is CPI in euro. We can also see some red folder building permit stuff happening later on 1:30. And we had some 7 o'clock news. Okay, cool. We must check the news. Let's now go and look at we was going through first and foremost for outside candles. I'm going to skip, obviously we were just using an example, going back in time, but I'm going to skip J30 immediately because I don't see no outside candle. EJ, I'm going to skip EJ again. I don't see no outside candle. I'm going to kind of skip Euro USD. I don't really like it. I'm going to skip GBP NZD, even though I think it's going to be bearish. I've seen an outside candle, seen the market come and close, huge imbalance, and then continue want to come down here. I think it's going to be a bearish day. All right. I'm going to look at GU, probably the same as EU. I'm going to skip it. Let's look at US 30 on a daily time frame. What am I looking? I'm looking straight away quickly just to see if we've got an outside candles. This yesterday's candle wasn't an outside candle. It was actually a doji reversal, so I'm going to skip that one. Let's go look at UJ. UJ wasn't an outside candle either. Let's go look at gold. Gold was an outside green candle, so I'm going to mark this here green. Okay, so let's just stop there now, because I got, so it's not gold, it's silver. All right, it's silver. All right, let's have a look at what gold's saying. Gold also outside. I'm going to mark it as green. Okay, cool. Now, is that the be all and end all? Am I ready to go? Of course I'm not. That's not the be all and end all. It's just me having a way that I can filter through a million different pairs. All right, so I can see which one takes my fancy, unless you only trade a particular market. Okay, so now I've seen that. Okay, I'm gonna go now. I'm gonna zoom and understand market structure wise what's going on. I've been able. I could have already known. Yeah, because obviously it could have been something I already traded, something I've looked at previously. But I want to understand. In fact, let me wipe my chart. I want to understand what's going on. All right. So I've zoomed all the way out. Now I don't need to go back to Stone Age. I don't need to. Sometimes you see me do it for forever, but you don't need to. It's me going overkill. Like going back to 2002. 20 years ago plus is unnecessary, but still gives you some sort of energy. The market has been trading within a range like this. Okay, look, the market has been trading within a range. If I kept pulling that out, which I will try and do, like so, and we can see that range has narrowed up, like so, but it still exists. We have seen us getting, breaking all-time highs, but the market's been trading. Okay, cool. That's giving me information on my daily time frame. Have a look. We can see that the market here has pushed up near a premium. Hasn't quite got to the top of that yellow line, but remember my yellow line is just a yellow line. How accurately I've drawn it is, it's not necessarily it's the most accurate. All right, let's do this. Let's make this a different color. Okay, cool. So we can see that this market has been trading, and I'm on a daily, kind of within this range. Okay, and we're at the bottom of this range in a discount area, and based upon the confluence of the outside candle energy, we've seen a big green outside candle after some wick rejection happening from a discount. This is all falling into play nicely. This is all making sense nicely. What I'm going to do is I'm going to put some lines in to understand that this was the previous close, okay, of the candle before, previous close over here. This is the imbalance of the market trying to say it doesn't like inefficiency, and it might want to close up that little space in here. I'm going to label that imbalance. Okay, and pushed above the high, the wick high, but I'm gonna mark it anyway, the wick high of the previous day. All right, now the day's already happened. All right, this is today now. It's already started. So when I drop my time frame, we're gonna go back to yesterday, Monday, but we're gonna see what's happened so far in Tuesday. Okay, so if I drop down to my, let's just say 15 minutes, okay, we can see Wagwan. Now Wagwan is this. This was yesterday, Monday. London session, New York session, New York session. This was Tuesday. And you can see now where it says previous close, i.e. where the new candle's opening, was about over here. Okay, it was about over here where the market opened. Okay, and what we've seen is within Asian session, we're still sleeping. We're not up. Asian session, the market has made this range in here. So what I'd be looking at is where's the liquidity at? Because remember, this big gray imbalance exists below here. And I'm thinking to myself, even if we want to be a big green candle, maybe this market wants to dip back in here and close up some of this big gray imbalance from the daily. Maybe. So I'll be looking to myself, thinking to myself, where are we positioned? I've just woken up now and I can see liquidity above here. Let me make that. You can look on my right hand side. You see it says liquidity. I can see liquidity here above another session in here. Okay, I can label it also. You see it, liquidity. Then I can see a huge ocean of imbalance. This is another magnet to press. I have to be aware of that because that is what might be pulling on my press. I'm aware now. All right, now London starts. Have a look at London. London starts. Let me scoot back a little piece. Yeah, let me drop to my 5 minute time frame. London starts over here. We see our liquidity here. And what would I have done if I was looking at this a little bit earlier? Well, the issue is that we see it kind of bleeding. So before London opens, we see it kind of bleeding through this Asian session high, which I don't really like. I don't like to see it bleed beforehand. Okay, it bled up here and took the liquidity from above Asian session high over here, which I'm going to label as liquidity taken. Okay, however, we've seen this happen and we've seen London start pushing down here. Now London's open. If we want to say realistically, would we have been able to get in that trade? No. It didn't give us no clean entrance to get in there. Started running down here. Cool, we stay calm. We're watching what's going on. We've seen a push in gold that we've missed, and now gold's currently sitting about 50% of the Asian session range. This is significant. It's a tipping point. Look, this is the Asian session range. This area here is a tipping point. Are we going to start closing below here and coming down here, going for liquidity? Or are we going to use this 50%, which also happens to be a previous battlefield that I can see just by looking over here? It's the previous battlefield. Look, where the market came up here, bang, couldn't break. Look, let's go to my wicks. Look, couldn't break, came down here, couldn't break, danced around it, pushed down, then pushed past it with strength and speed, bang. This is a previous battlefield, not the line, the area. I could just as easily make a little rectangle. It's a previous battlefield. So I'd be watching this very keenly. All right. And either two scenarios, I'll be looking for an opportunity because the market is supposed to be a big green candle. If I see a clean breaker structure, to get in for the buy. Yeah. At least up to these equal highs. But I am still concerned about this market because remember, I'd like to take a buy anywhere below the open of this candle. I don't really want to take a buy above. Because remember, I'm thinking to myself, this is going to be a big green candle. All right, so let's just watch it. Let's just pretend we don't do nothing. Let's watch it, maybe hit play. Look, we're at that 50% level. What a coinky dink. At that 50% level of the Asian session, we start seeing a whole conversation, argument happening. Guys, I want you to really deep the education that you're getting by watching what I'm saying. Because I'm showing you certain things that now you can look out for. When you take a trade and you see the market get back into the 50% level of that Asian session range, you can start thinking to yourself, is the market going to decide it wants to continue push up? This is a tipping point. So we're watching it. So let's see what happens. So definitely a conversation happening here. There was no conversation happening from up here. It was whoo, he's jumping off the roof. Breaking structure below all of this range, because don't get twisted, the market was trading within this little range over here. Okay, the market was trading within that. Oops. that little green box over there. The market took liquidity from above, nam, pushed down over here, get to 50%, and now it's having another conversation. Yeah, should we go down? What do you think? Should we keep going down? Should we go up? That's the conversation that's happening right now. We are concerned about this daily imbalance. The market maybe wanted to come and trade back in here. But we're also quite concerned about the liquidity sitting above here, these two red lines, and then all of this imbalance above, which is a magnet to price. So right now, in my opinion, gold is not a great trade. It's not an obvious play because it could go either or. It could say, let's go and take this liquidity, continue being bullish, making higher highs, higher lows, higher highs, higher lows. Or it could say, we want to be bullish, but let's take the Mickey, push all the way down here, wick maybe at least 50% into this imbalance level, and then let's continue to make a green candle. This is the dilemma that's happening right now. Let's play it forward to current time, see what's happening. To current time, the market has come up, and that area over here right now, in present time, the market has taken some of this liquidity. So now I can change this one here to liquidity taken. I can even change this one here to liquidity taken. And the question is now, is the market going to run up and take this imbalance? Or is there an opportunity to sell into that imbalance of the daily for then maybe later on New York session or something like that to push it all the way up in here? Now, first of all, could this market do that? It's gold. Could market move from here down into here, this type of distance? It definitely could in one session. It could do. Okay, so we're watching it. Let me go to present time. Are we at present time? Yes, we are. All right, so liquidity has just been taken above a previous where did we get that line from? A previous Asian session and a previous New York session. But the concern is all of this ocean of imbalance above here. Let's look at it from a bigger picture and understand what this market's been doing. Well, we understand that this market is actually in a discounted area. However, it's just broken some structure above here. Look at this. Look at us. Just broken above this structure over here, and therefore we may see a sell-off, even if the market wants to get bullish. Just broke above this structure. We understand markets moving waves. We might see this market coming down here into this type of area, even if it wants to go up, which is the play that we said from the jump based upon our outside candles, is what I'm thinking to myself maybe on the cards. So right now, this minute, as liquidity has been taken, I'd be dropping my time frame down. Now it's gold, and sometimes gold can be a little bit erratic. All right, so we don't have to necessarily take. We want to see some clear, indications, confirmations of what this market may do. So the market's come up here and taken this liquidity here, wicked up into this level here. Now I'm not just going to be getting involved and hitting my button straight away. Okay, I'm going to be saying, okay, taking the liquidity. Does it want to take this one properly? This one over here, it's just a little bit of a wick above this last one. Does it want to take it properly? I'm going to be waiting to see what I want. All right, now this is the dilemma. The dilemma is I can take this trade as an indication. It really hasn't made a clear indication yet because it's all been a bit wicky. But indication, correction, continue, and buy into this imbalance, because ultimately I'm thinking to myself the candle's going to be a big green candle. It might just give me the FU sign today and be like, we're not closing the imbalance today. It might do. So I can take an indication, correction, continuation, or I can wait to see what event is going to happen around this area. If no event happens around this area and the market starts coming up in here, well, maybe there's an opportunity to take an indication, correction, continuation to close up this imbalance, which is still going to be a great trade if you get involved in it. Yeah. But right now, an event's supposed to be happening. Yeah. It's 9 o'clock. We've just taken some liquidity. The market's definitely having a little think about it. To be fair, there is a really ugly manipulation M that's just turned up, but I don't like it. Here, it's really ugly. Yeah. I'm not going to take it. I'll be watching in here, and if I've seen there's some ugly manipulation patterns on the 1 minute time, let me get out of there. Let's say that time frame's ugly. I'm waiting for something definitive to let me know that maybe the market wants to come down, or something definitive to let me know the market don't give a damn about coming down. It wants to keep pushing up. All right. So on a 5 minute time frame, we haven't got a manipulation M. We have taken this liquidity. On a 3 minute time frame, we don't have a manipulation M. On a 2 minute time frame, we don't have a manipulation M. On a 1 minute time frame, we do have this manipulation M, but it's ugly. And where would I say the tapping was? Well, here was the imbalance in here. We did push quite high in here. No, we're not going to take that. Let's just be calm and be watching it. The market's currently in here. Yeah. There's some liquidity below these equal lows. We'll be watching. What I'd be waiting for here is I'd be saying to myself, I want to see some structure that breaking. Like the way this is such a mess in here, I'd like to see some actual clear structure breaking. And on a 1 minute time frame, let's say maybe that's here. This is the last high. This is the last little bit of structure over here. In here at the moment is a conversation. Unless I see a very clean, clear, lovely manipulation situation happening like this, which I can't see unless it's trying to turn up right now on a 1 minute time frame, is in here. This big displacement here. Possibly. So right now, if this candle here, without breaking this structure right here, closes down here, too late. Too late, it's wicked above. So cool, calm. I'm watching it. I'm trying to see what this market's going to go and do. Yeah. Remember, the problem with this gold trade is we have this attraction of this imbalance above, as well as we have this attraction of this daily imbalance below. That's the problem. The reason why you can see me here being quite sensitive to what's going on here. Now, what I can say is the market at the moment is slightly breaking outside of the range based upon this white dotted line, which is looking like, okay, maybe it wants to do something, but it's still not broken any good structure for me. If it makes another little higher, great, because that will give me, instead of the structure being all the way down here, I can turn around and say, here's a structure if this makes a higher high. So therefore, it's a shorter distance for it to break that structure and give me my nice manipulation end. But at the moment, that's not the case, because this is the highest point at the moment. So this is the low for the highest point. And this is how we watch and we judge. And I'm not going to sit with my mouth open. I'm going to put an alert here, crossing down. I'm going to put an alert over here, crossing up. But even though we haven't taken a trade, I've shown you how my mind works in regards to the trade. Things that you can start taking into consideration when you come up, look at the trade. All right. Let's go and I'm going to look at EU and GU. I don't like it because it wasn't, when I say I don't like it, it didn't give us no outside energy. Okay. It kind of was just about kind of mucking about in here. And say, for example, our EU is at the bottom in a discount of consolidation. Look, if I go here, this market's kind of been in this gray box. You see, even though we've got some wicks below it, we've kind of been in this gray box. And therefore, you can see my alert here, boom. All right, and I'll pop in another alert here. I kind of want to know when the market breaks outside that gray box. If not, the market may be deciding it wants to trade back up into this gray here, into a premium from a discount of this gray box. All right, so this is a little bit at the moment because it didn't give us any outside candle energy. Yeah, and it's at this bottom here of a range, which is a discount. Okay, so maybe this market, even if it wants to come down, we may see it push up first before deciding to come down. Yeah, push up, maybe not break this previous swing structure and then say, yeah, we've had enough, we're going to break outside of this grey box. So I'm conscious of that. Let's drop our time frame down and look at what's happening on a smaller time frame in regards to liquidity. Yeah, so from a liquidity perspective, we can see here that this was Asian session higher, we were sleeping. New York started here, didn't take the Asian session highs and continue to push down, breaking structure, indicating correcting and continue pushing down. But what was it chasing? Well, right now we've just taken liquidity from here. Oops. We've just taken liquidity from below New York session here. Liquidity taken. And where else can we see the market pushing all the way down into this imbalance of all these green candles? And where's the next area of liquidity? All the way kind of down here, to be fair. So right now, this market is pushed past this liquidity level here. I'm going to watch on a smaller time frame to see what it's doing in here. And all of these candles here, I understand, is going to cause some imbalance. Let's have a look at that. I just got into an hour time frame to see how we're at. See, look at that imbalance in here. So maybe that market's just in here, tapping in, closing some imbalance, all right, paying some bills, okay, in here, all right, gold's just pushed up. So I'll be looking at this right now as this imbalance is being closed. It's two scenarios. It's either this market here from a premium, look, it's in a premium of this range. Look, I drew some yellow lines. It was a premium of this trend, this angle here, and this angle here. So either it's coming down in here to tap into the discount to push back up, or we're going to push straight past this level and finally break outside this box. Either way, I don't know, so I must trade what I see. Now, at the moment, we can see that it's pushed right past this little imbalance at the moment. And it looks like we're reaching for this liquidity over here in Euro USD. Let's drop our time frame all the way down to our smaller time frame. Let's see. Look, we've taken liquidity from below this level. See, liquidity taken. We've closed up this imbalance. It's completely closed, gone straight past it. Let's have a look at the smaller time frame. What's going on over here? And we're coming into this kind of area. For me right now, it looks like we're reaching for this liquidity down here. It looks like we are reaching for this liquidity down here, and I can't get into this trade. How can I get in? I can't get in for the sell, but I can't just hit the button now. Because if I do that, my stop's gonna have to be up here in space. My next milestone is gonna be, let's see what happens over here. Pop an alert, crossing down. Let's see what happens when that market gets down to here. Are we gonna, is it the case I wanted to take that liquidity and this liquidity before springing up into this energy here to maybe come down later? I don't know. But I can't hit the button now. And I can't trade in the past, unfortunately. I can't go backwards. So therefore, I'm looking at this energy saying there's liquidity here that this market is, look at this. Ooh, USD's gained some substantial strength, or GBP has lost some strength. How would I work out which one is done? Going in here, looking at my BXY or my DXY. All right, I'm hearing it ring. So on my DXY, look, showing me here that the dollar has gained substantial strength and come into an area of liquidity with that market there, and the dollar perspective, you know, may tap into here and push back there. Yeah, meaning that we might see that spring back from our GBP USD. Yeah, let's have a look. Let's go to our Euro USD. Sorry. Now we've just taken that liquidity now from that level. Now I'm watching keenly. What's gonna go on now? We've just taken two levels, significant levels of liquidity. All right, from there, this area here, and now I can change this to this area here, liquidity taken. There is a low over here, which is a New York low outside of our trading window, but there is a low over here with this potential liquidity. And I'm watching it to see what go on. Let me zoom in right now to see what's happening on a 1 minute time frame. Let's refresh that. Okay, seeing something happening, little reaction after taking that liquidity. Now the issue is this market is coming down here so quickly, we may miss it unless we drop down to a smaller time frame, which I really don't like doing with you lot on a call. I don't like showing you guys me looking at trade at 30 seconds, okay? Though you can see the same stuff, it can get you into a bad habit whereby you start seeing a lot of noise instead of start seeing, you know, getting clear. But look, we can see some sort of reaction to that liquidity being taken. All right. We can see this doji candle on the 30-second time frame. We can see this market's pushed out of here like so. I don't believe we're going to be able to get a quick entry unless it decides it wants to push down further, because I'm on a 30-second time frame. There isn't a clear manipulation W, but I'm telling you there is one on a 15-second time frame. Let's have a look. Yeah. Now, I don't want to get involved with a 15-second time frame saying that this is a manipulation W, but we have seen quite a big push out here. Boom, 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 breaking this structure. And potentially this market could tap into here, which it already has tapped into the middle of the W, which is here, this area here, and may continue pushing. Unfortunately, this may be one of them ones where unless we see this market push back down in here on a 1 minute time frame and give us a nice clean breaker structure, we may miss it, or we may have to wait until it comes and pushes and breaks above the 1 minute structure that we can see here. Is what it is. I'm not going to tell you and say you have to get into this trade here based upon 15-second break of structure. It's unnecessary. All right, so we're watching it here, and I'm going to be waiting for this market to push down here, give us a lovely manipulation break for me to even consider it. Okay. But we've seen liquidity taken from here. We can see some more liquidity down here, which might give an excuse to make the right shoulder of the W and come back in here, give us a lovely entry that the market might want to push up. Might want to push up. The reason why I say might is because look at it on a daily time frame. I said we were in a discount all the way at the bottom of that gray box, and the yesterday's candle was just about an outside candle. Yeah, just about. Yeah, but we've seen this big retracement, and we understand if we think that today's going to be a green candle, anything below the open, which is all the way up here, would be great for a buy. Okay. However, like I said to you, my concern is at some point this market may decide to break outside of this gray range, and it might be today. All right. But either way, I'm trading what I see, and what I've seen is liquidity has been taken from below, and I'll be waiting for a lovely manipulation pattern to get in for the buy. And if I do get in for the buy and it starts breaking structure, it's going to be a big trade. because it's gonna keep pushing all the way up here, at least to the previous open and above, to make a big green candle. All right, so we can see here that the market's definitely had a reaction, doing something, but from a structural perspective, it's just difficult to determine and say we should have got in, because it hasn't given us that structural break on a 1 minute time frame, because things are happening so quickly. Okay, because things are happening so quickly, but I'll keep an eye on it. I've got my alerts in here already, and we'll see what it's saying, but potentially that's one. We can use GU to see whether or not GU is giving us any better confirmations. All right, let's go to GU. Well, GU similarly pushed down here, ate both of these liquidity levels, and on a 1 minute time frame, we are getting better structure to be able to make some decisions. All right, so liquidity taken. Okay, let's zoom out of here on a 15-minute time frame. Let's see what's happening. Zoom out of here on a 1 hour time frame. Now, you see, different to EU, let's go all the way to our daily. Let me not talk too soon. Yeah, slightly different to our EU, that we can see a clear consolidation box that the market's been trading within. GU's a bit cleaner, just been making higher highs, higher lows, and now we're breaking structure, making some lower lows over here. And the opportunity is, or the thought process is, that maybe the market wants to come back in here to close up this imbalance. Yeah, maybe tap into a previous battlefield over here or somewhere up here, on the basis that we're going to keep coming down now and becoming bearish. All right, so I'm looking here in a 1 minute time frame. I'm trying to check out and see where we can get a lovely entry or not. Maybe GU's the better one than EU. Who knows? At the moment, we have seen, look, the market came and closed up to call this liquidity. There's some more liquidity down here, it looks like, which is going to be like a New York session low to me. See? No, that was a previous one, so I'm going to change that. Let's get rid of some of these previous lines. Okay, so it's different. Yeah, so we get rid of the previous. We can see London session is pushed all the way down here, and it's pursuing. Might as well identify that these London session lows here and these New York session lows here. All right, so really I'm waiting to hear these ring-a-ling-a-ling, and maybe that's going to give me an opportunity to be able to get in over here. So that was a mistake. I was looking at some previous lines. Let's not say liquidity taken. Let's just make it liquidity. Let's make this one liquidity. All right, cool. So that they're both servicing each other. When this one starts to ring, let me zoom in and make sure I put it in the right place. Yeah, when this one starts to ring, maybe that's going to be a signal for us that maybe there's an opportunity to get involved. Let's look here at the candles. We have seen it absolutely dive off a cliff, okay? And similarly with EU, I've got my alerts, okay? Let's have a look at gold, which rang whilst we was talking, all right? Let's have a look at gold. Was it gold or silver? I can't remember, it's one of them. All right, and let's see Huaguan. Okay, so we was talking about that what event's gonna happen in here, and yeah, we have watching it in here. We saw the market. Now the market's fully taken that liquidity, pushed up into this imbalance a little piece, okay, and potentially on a 1 minute time frame, kind of making a bit of a manipulation pattern. On a 2 minute time frame, making a lovely manipulation M. And remember what we said from the bigger daily time frame is this market might be trying to come and all the way down and close a daily imbalance. We've seen a 2 minute, in the next 48 seconds, we see a 2 minute manipulation M. All right, and the 1 minute, it's a bit uglier, but it's pushing up. So we can take this for, this is an indication below this little level of structure. This is a correction that's happening now, a continuation play. We could take it like that, indication, correction, continuation play, doing this. Okay, could do. Or we can wait, have a look at here on the 2 minute time frame. We was pushing down here. I'm going to wait for the indication, correction, continuation, because remember the concern is this market actually wants to keep pushing up to close this imbalance. Now what I would say is this, after showing me a manipulation M, if this market closes above here, I'm going to flip for the buy to close this imbalance. Remember I said there's an either or scenario happening here. Either it's going to take the high imbalance or it's going to come down here and close this imbalance below. So if after showing me a manipulation M on the, it's kind of ugly on the 1 minute time frame, I'm reaching, but If this closes here on the 1 minute time frame above here, I will flip my energy and I will take a small jab, small, all right, jab in here to the tune of about 30 pips, all right. What's going on there? Yeah, if it closes over there, we've got 20 seconds for it to close. It's about 30 pips. That means I need to make sure I've got my calculator out. I need to make sure that I'm looking at it. So this is a continuation play, potentially on the gold, all right, on the basis that the market doesn't look like it was giving man any bearish energy, which is closed above now. I'm gonna take a jab. Jab means I'm risking like $100, okay, to see what's gonna go on. See if it allows me to, all right. And I'm gonna take the jab and we're gonna see where I'll go on, which literally is a very small position. As a jab, and I'm in. All right, as a jab, I'm in. Okay, not as a big, you know, full-hearted position because it's a bit funny. There is that still concern below, yeah. But I've taken it as a jab with my stop below these lows. Literally, guys, is risking, you know, like $100. You get what I'm saying? Yeah. Now, the reason why I don't mind that, besides now that no, it makes a lovely manipulation pattern and flies down here and stops me out, makes that M that I thought may turn up after this liquidity has been taken, then I would have been stopped at for $100 and I'll get in for the sell. All right. This is a bit more advanced and not necessarily a 10 out of 10 trade, but I'm looking at it on the basis of this market potentially deciding it wants to continue pushing up in here, at least 50% of the imbalance. It's probably where that text is over here, yeah. But it could potentially keep flying up here. Why have I said that? Well, on a candle perspective, it's an outside candle energy. Okay, yeah, this was the candle, previous candle, and it could want to push up in here at least to 50% of this level in here into a previous battlefield, which was ultimately here, this wick low. This is the previous battlefield. All right, so it's a little bit of a position, but then, like I said, I'm concerned that the market might want to close this imbalance and push up in it. All right, so my little jab of a position is in the blue, but it's a jab. All right, it's a very small jab, not risking any real capital, just, you know, exercising my ideas. All right, if that jab gets up to something considerable and keeps breaking structure, then I may scale in, but I am still quite concerned about the market coming back down in here. Okay, we will watch it, we will see what happens. And if we get stopped out, we maybe see a lovely big manipulation M pattern turn up in here. That's cool, because I know what I'm doing next. What I'm doing next was actually going to take that trade for the sell all the way into at least, ideally, 50% of that imbalance, of that daily imbalance, which is all the way down here. All right. Now, what could be the catalyst to do that? Well, we do have some news today, as we identify. There is some news today. Now, whether or not it's going to be a big enough catalyst to make that goal to do that, you know, building permits, probably not. I don't really think so, but we do have Euro CPI, which could influence our Euro position we were just looking at. Okay, let's go and look at something else. There isn't too much. Does anyone want me to look at a particular pair? Anything? Should you have a look at Bitcoin? See what that's saying? Oh, look at the time. I didn't realize the time. Jeez, time flies when you're having fun, eh? Let's go in here. Look at Bitcoin, guys. Yeah, you know, we're up in here, getting up to these massive numbers. All right. Getting up to these big numbers, getting up to what's that, $93,500, okay, and really making that big push up in there. Now, do I want to get involved straight away for the buy? I don't. I'm sorry. It's too much concerns below, too much imbalances, too much, you know, prior experience to understanding markets moving waves, etc. Okay. So personally, yeah, the market could be accelerating, which it is, we know, because of Trump. Could be accelerating within a new range, like so. But I just don't really want to buy things when they're the most expensive they've ever been. All right. Personally, you guys can do as you please, but personally, I do not want to buy things when they're the most expensive they've ever been. All right. Our little continuation jab is still in the blue. It's pushing up, and what I would do with that continuation jab on gold, if you followed me into the abyss, taking a trade which wasn't necessarily a 10 out of 10, but taking that play is as soon as we get to a certain level, I'm going to make it risk-free because I'm quite concerned about it. You know, I'm happy to think to myself that maybe the market wants to push up and close. Was it gold? Sorry,
Yeah, it was gold.
Look, I'm on silver. Wrong one. May want to push up into here and close some of this imbalance. Okay. However, I'm also quite concerned about that imbalance below. So that was a continuation play trade. We took base and we planned it. We said if it ignores that 1 minute break structure after taking that liquidity, I'm going to be getting in for the buy. Yeah, which it did. Okay. So that's why we're currently in the blue. Small, but we're currently in the blue. And where might that market go? It might close up this whole imbalance and just make a nice big green candle for the day, or it might just tap into 50% of that little level, which is about where you can see these little extra little grey boxes, and then decide it wants to come down in here, and then maybe New York session want to push up in here or do something else. Who knows? Yeah, but either way, I don't care. I've managed my risk. Me losing $100 out of my account doesn't mean too much. But if I take a 1 to 5 and make $500, or take a 1 to 10 today and I make $1,000, adding that to my account means something. So that is me managing my risk. Is it going to take longer to get to a destination? Yes, but who cares? Yeah, slow and steady wins the race. Any questions? Any questiones? Good. Guys, I'm going to love you and leave you. It's Tuesday. And I am going to put something on that could broaden our minds, grow the grey matter. I'm going to love and leave the people that are tuning in live, that are following me.